So obviously, some of these companies in your top holdings. Let's start with Facebook and Alphabet, since, of course, they're both impacted by a coming ad slowdown. They didn't do so badly last quarter, but it's all about the current quarter. How concerned are you that we're going to see the full impact of the pandemic and it's not going to look good?
Well, I think it's a tale of two stories, the short term and the long term. On the short term, it's very easy for companies to dial back advertising. They can do it on their computers, in seconds. So I think any corporate that is feeling like they have to be in cash preservation mode is happy to dial back their spend on search engine marketing or advertising on Facebook. With that being said, you've seen phenomenal growth in Google's cloud. You're seeing growth in users on Facebook, which is something that's been slowing down for many quarters in a row. So, we see bright spots that I think are going to continue to, shine a light on the long-term growth of these companies, even if that means they have to experience a little bit of turbulence over the next quarter or so.
So you also hold Apple, Tesla, Microsoft. Which of these companies would you say you're most concerned about how they can weather the crisis?
Well, they're all going to face their own unique pressures. I think if you look at Tesla, the automobile game is a very tough one to succeed in, and they've been a company that's been valued like a cloud computing company, but creates cars that trade at some of the lowest valuations on the planet. So that company, I think, we're a little bit more cautious on. If you look at Apple and Microsoft, they're hard companies to fire. That's kind of how we're thinking about the tech industry right now. If you're a consumer and phone breaks during COVID-19, you're going to get a new phone. If you're a company that's cash-strapped, you might dial back your advertising, but you're probably not going to fire Microsoft. And I think that does give a lot of strength to those two companies, even in the midst of crisis.
So what do you think the second phase of the pandemic looks like from a tech perspective? Obviously, we saw the last quarter. What does the current quarter ultimately look like, and what trends are you going to be watching for clues as to what the balance sheet looks like at the end of the next few weeks?
Well, we're going to continue looking very closely at the cloud space. This is an area where a lot of companies have seen acceleration in acquiring new customers, and that's really the most expensive part of their business. And what we want to see is how capable they are of holding on to those customers over the next few quarters. We look at a company like Netflix. They had a huge quarter in new users, but the most amazing thing to us is how little money they spent to get those users. So Netflix, historically, $100 in Q4 of last year per new user. In previous quarters, they spent almost $200 per new user. This quarter, they spent $30. They're getting users for free, basically, and that makes it very profitable if they look forward to, when they're going to break even with that customer 2, 3, 4 months from now. So we're going to see, does that user growth continue in a lot of these cloud companies like Netflix or some of the SaaS companies, and how long can they hold on to these companies, or how long can they hold on to these customers and to continue to generate new revenue from them?